Hi everyone, welcome to Buy Now Sell Now Weekend. I'm Mubina Kapasi.
Hi everyone, I'm Avan Dabash and we will be dedicating the show to all of our viewers and their stock queries. So let's tell you what's lined up today on the show. Well, we've got some queries coming in on Exide Industries. We'll also be discussing Dwarikesh Sugar and Aurobindo Pharma.
And as always, we'll be having a portfolio segment, and this time around we'll be discussing Kiran Kumar, Nirela and Apurva Gorov's portfolios on the show.
Okay, time to bring on board our guests, and joining in today on the fundamentals is Ashish Maheshwari, Director, Blue Ocean Strategic Advisors, and on the technicals guiding us is Rakesh Bansal, VP, RK Global. Welcome to the show, gentlemen. Thanks for being with us. Let's take it straight to our first query. Well, Balaji K has sent in this query from Hyderabad. It's a question where he's asking, should he buy into Exide Industries and Dwarikesh Sugar at the current levels? Well, two stocks from very different sectors, so let's dissect them individually then. Rakesh, guide us through the technicals of these two stocks. Do you think that it's a compelling buy at the current levels?
Hi Avan, I don't think both the stocks are a compelling buy. I'll clearly suggest one should avoid buying Exide at current levels. If he still wants to buy Exide at current levels, then I can suggest a stop loss. Place a stop loss at 170, buy for a target price of 183 on the upside. I'll suggest one should avoid Exide, one should look at oil and gas space, energy space, because this is a space which is totally insulated from the ongoing demonetization. Here we are continuously seeing outperformance. So I'll suggest avoid Exide, look at oil and gas and energy space. If he still wants to buy Exide, then buy Exide with a stop loss of 170, target 180, 183. On the Dwarikesh Sugar, here the technical structure is positive. Stock prices are consolidating at higher levels. Dwarikesh Sugar is having a good support at around 280 levels. If he wants to buy Dwarikesh Sugar, then one can buy Dwarikesh Sugar with a stop loss at 280, buy for a target price of 304. But among the sugar stocks, I like AID Perry, because here the technical structure is extremely positive and stock prices are on the edge of taking a big breakout. I think this might be the first sugar stock to make a new lifetime high. So instead of Dwarikesh Sugar, if he buys AID Perry and the view is 6 to 8 months, then definitely I feel AID Perry is going to outperform Dwarikesh Sugar.
Okay, those are some recommendations coming in. Instead of Exide Industries, you may look at something in the oil and gas space. But yes, if you do want to still go ahead and stick with Exide, those are some levels that you may monitor. And EID Parry, of course, does look a little more positive than Dwarikesh Sugar. Let's move on to our next query. And we have Arif Patel, who is sending in his query. He says he's bought 850 shares of Aurobindo Pharma. This he's purchased at a price of about 749 rupees with a time horizon of 3 years. And he wants to know whether to hold or sell. And well, Aurobindo is one stock that has been in focus. In fact, on Friday, there were reports which suggested that the US and a couple of states have sued Aurobindo along with a couple of other pharma names, accusing them of actually manipulating prices of some key drugs to really increase them. We have also a Motilal Oswal note which says that Auro does not have sales in the doxycycline Hyclare, which is the sales for the second product, which is Glyburid, which is below $1 million. And then, of course, we did have Aurobindo's clarification. But yes, Rakesh, on the technicals, what would you advise our viewer on Aurobindo Pharma?
Well, Movina, like the purchase price is too high. I won't say too high because in the last 3-4 days, we have seen a sharp correction in the stock. I'll clearly suggest the time period is too high, too long, 3 years. One should clearly hold, and I'll suggest if the pocket allows, then one should try to average on decline. On downside, like 675 seems a multi-year support to me. I'll suggest if he can buy more, he should buy more on declines around 675. And in 1 year time, I feel we are likely to see a price of 813 on upside on Aurobindo Pharma.
Okay, that's the advice coming in. On the technical side, you can watch out for the stock touching levels of about 813 in the long haul. Next up, we have a query coming in from Kiran Kumar, Nirela and Apurva Gorov's portfolios that will be lined up ahead on the show. Stay with us after we come back from this short break.
Welcome back. This is Buy Now, Sell Now Weekend.
Okay, we've got our portfolio advisor segment lined up. So after addressing all of those viewer queries, we're going to get straight to Kiran Kumar Narela's portfolio. First up, 35 years old, employed in a short-term time horizon. There's a total of 5 stocks and a very short-term time horizon actually of the next 5 months or so. So let's find out which are the stocks in Kiran's portfolio. First up, Ujjivan Financial bought at 340 100 shares. SQS India features on the list. It's at a buy price of 777. It's about 100 shares. Saturn Credit Care 100 shares bought at 380 rupees. Moving right on then, Divi's Laboratories features on the list at 1180, close to 100 shares. And finally, Alchem Laboratories at 1620, 100 shares. So, Ashish, Maheshwari now joins in on the show. Ashish, let's get in your views on the first 3 stocks. It's clearly a portfolio that's isolated to the mid-cap stocks. He's not really making any money right now, perhaps very recent buys as well. So let's help him out. Ujjivan Financial, what's your outlook here? Do you think SQS India is a good stock to have, and what do you make of Saturn Credit Care?
Okay, in its portfolio particularly, there are 5 stocks, where 2 are from microfinance companies, 2 are pharma, and 1 is into IT. As far as my view is concerned, Ujjivan is a company like where he can still continue to holding his position, because from whatever the work related to demonetization was there, I think Ujjivan kind of company can handle it well. So in my view, in last 1 month or 3 month performance, if you see also Ujjivan, it has really outperformed other microfinance companies. So my advice will be to remain invested in Ujjivan, and you can book gains at around 400 rupees in next 6 months' time. As far as SQS India is concerned, it's an interesting name, though not very known name, but they are into very specialized, unique services. That is, they are reducing life cycle and time frame for software testing in BFSI segment. And this stock has also delivered good returns in last 1 month. Almost the stock has up by 15 odd %. So in my view, you can continue to remain invested here, and I expect a target of 950 to 1,000 rupees also is quite possible in SQS India. As far as Saturn Credit is concerned, again, one problem is with this microfinance company is that they operate mostly in the northern India, and where the impact of demonetization is much more in northern India compared to western and southern India. So my advice will be to exit from Saturn Credit. You are sitting on a very minor loss, and instead of this, I prefer that you buy Kinfin Home Finance, which is a much better company, and the performance is also good, and mostly they lend housing finance loan to the government employees. And the stock looks good from here. So my advice will be to exit Saturn and shift to Kinfin Home.
All right, resilient to the entire demonetization move, Ujjivan Financial would be a hold candidate, and so is SQS India. But you can actually exit Saturn Credit Care and look out for Kinfin Homes, which may actually have some more upside potential. Moving on to pharma companies, mid-cap pharma companies make their way into his list. There's Divi's Labs, which is bought at about 1,180 rupees, and Alchem Labs at 1620 rupees rather per share. 100 shares over there for both of these stocks. Ashish, come in on these two. What would you advise him?
Now, as far as Divi's and Alchem are concerned, both these stocks are, if you see, underperformer. Divi's has come out with a bad set of Q2 numbers when net profit came down, and they also are facing this US FDA related issues where 483 form is issued to them. So I advise that if you want to remain in pharma, why don't you shift to Biocon, which is much better stock, and in last 1 month the stock is almost up by 15 odd %. So this can even go up to 1100 mark. As far as Alchem is concerned, again this is an underperformer in pharma segment, and they also got 483 observation for their Ankleshwar plant recently, and after that the stock is under some pressure. So my advice will be, instead of this, look at Glenmark Pharma, which is much more stable kind of a stock. Company came out with good results, and no US FDA related issues are there. It can give you much better and steady return going forward.
Okay, that's the view coming in on the entire portfolio, Kiran. I hope you've taken note of Ashish's advice and some of the chops and changes that he has made. Next up, we've got another portfolio of Apurva Gorov. 30 years of age and he's employed. He's got a short-term time horizon of the next 6 months to 1 year and hails from New Delhi. Well, let's take it straight to the stocks. Dhampur Sugar, 300 shares at 126. Axis Bank, 548, pitched up 100 shares. There's from the auto space, 100 shares of Tata Motors at 495 rupees. JK Tyres has been purchased at 123. He owns close to 200 shares. And he finally has Jet Airways in the portfolio as well, 406, close to 100 shares of that stock. Well, from what I've noticed, he's not making money on any of the stocks in his portfolio. So let's find out what exactly is the advice. Ashish, start off then with Dhampur Sugar. Do you think that it's a good contender? There are marquee names like Axis Bank and Tata Motors as well. What is your advice here?
Yes, this is quite diversified portfolio. So I'm quite bullish on the prospects of sugar sector in this particular year. And these particular stock, particularly Dhampur Sugar, has also performed well. In the last 1 month, also stock is up by almost 10-12%. And besides this, numbers are also quite good for Q2. So in my view, Dhampur Sugar, you can continue to remain invested. And my target for stock will be 140 to 150 level. At that level, you can exit. As far as Axis is concerned, as you have bought the stock at slightly at higher price, I'll suggest that you can even average it out at 470 levels. Again, the rationale is there's nothing wrong as such with the banking sector per se, and January onwards, I again see good run-up again resuming in private sector banking stocks also. So at 470, if you try to average, I'm expecting that this stock can go up to 510 to 20 levels. At that level, you can exit one. As far as Tata Motors is concerned, it's a hold from my side. Stock has good run-up on this open market purchases from Tata Sons. And after this, there's some positive vibe on the stock. So at 470, I'll not advise to average or sell the stock, but you can remain invested and in any range, you can get this price at 495 to 500. That price you can exit from the stock.
All right, Dhampur Sugar, well, it's a good company in a good sector, so you can hold on to that one. Similar is the case with Axis Bank as well, because while the sector is good and while you have, of course, purchased it at a higher price, this is a good time to average out your cost. And so is Tata Motors. In fact, he is advising that you may hold on to this stock. Ashish, come in then on JK Tyres, purchased at 123 rupees and Jet Airways at 406 rupees. What's the outlook on these two stocks?
These two are underperformer if you ask me, though tire stocks have given very good return to investors in 2016. But of late, these stocks are not delivered because of rising competition from Chinese tires as well as rising in input cost also. So my advice will be to exit from JK Tyre, and instead of auto ancillary kind of business, why not look at main automobile companies, which is again Eicher Motors in my view. If you buy at this price, it can give you very good returns. 10 to 15% upside is still left, because people can slow their purchases for tire, etc. But those players who are into niche segment in automobile will continue to get traction, and where Eicher Motors command good premium. So my advice will be to exit JK Tyre and buy Eicher Motors. Another view on Jet Airways is again a underperformer stock. I'll advise to book loss from this particular stock, because in aviation sector already too much pressure is there on pricing, and every 7 or 10 days you are seeing sale for booking tickets for entire 1 year now. So it shows a lot of cash pressure is there in the aviation companies. So my advice will be to remain invested in 4 stocks instead of 5 and exit Jet Airways one.
That's a problem one, and clearly Ashish has given you some clear direction as to how you should approach your portfolio, Apurva. I hope that that advice has been helpful. A very important disclaimer from our end that the portfolio recommended is a model portfolio. Please consult your individual investment advisor before taking any investment decisions. Time to slip into another short break. Stay with us for top technical and fundamental stock ideas. on with us. This is Buy Now, Sell Now Weekend.
Okay, and let's just talk about the markets then and the kind of week that the Nifty has actually, performed, how it has performed last week, and it has dipped. It's another week of profit booking really coming in with the Nifty slipping below the 8150 mark, 1.5 percentage gone for that one, 257 points shaved off for the Sensex. But let's just talk more about the markets with our experts then, and Rakesh Bansal still with us. Rakesh, what's your view in terms of important levels that we may map out for the benchmark now that the all-important Fed meet is behind us?
Well, Mubina, if you see Nifty is not trading with a positive bias, we have seen today we have seen a closing below 8150 levels. On the downside, 8100 is the immediate support, and on the upside 8230 is a immediate resistance. I'll only suggest buying Nifty only when we decisively cracks 8200 levels on the upside. It's only when we crack 8200 levels on the upside, then only we are going to witness some kind of a positive crossover on momentum indicators. Else, Nifty is trading with a negative bias and it's stuck in a trading range. On the downside, 8100 is the immediate support. If by any chance Nifty cracks 8100 levels on the downside, then we might see another leg of selling which might take Nifty to 8050 levels on the downside. And if you see about Bank Nifty, for the Bank Nifty, 18,200 is the immediate support. If by chance Bank Nifty cracks 18,200 levels on the downside, then we might see some kind of a big selling coming into the Bank Nifty.
Okay, there you have it. That's a view coming in on the index. Rakesh, walk us through some of the top picks that you've got for our viewers.
Well, the first one is a buy call on Adani Enterprises. Here we have witnessed some kind of a price breakout from a rounding bottom formation, which is technically considered a bullish pattern. And in today's session also, Adani Enterprises never participated in any decline. Here the structure is positive. One can buy Adani Enterprises at current levels, place a stop loss at 69.90 levels and buy for a target price of 77. My second one is a buy call on Glenmark Pharma. Today the most pharma counters, be it Aurobindo Pharma, Sun Pharma, they were trading with a negative bias. Whereas in Glenmark Pharma, we have witnessed a positive crossover on the momentum indicators, as well as we have witnessed a breakout above 920 levels. Glenmark is an excellent defensive bet in the current volatile market. Buy Glenmark with a stop loss at 899 and buy for a target price of 955.
Okay, those are some recommendations. Adani Enterprises as well as Glenmark, so keep those on your radar. They have been able to in fact outperform the benchmark. Rakesh, I just want to talk to you about the Nifty Bank then, because that one as well has in fact significantly underperformed really. It's one of the big laggards as well in last week's list of indices. 2% gone for the Nifty Bank. What's your own view in terms of levels we can watch out for?
Well, Mubina, I feel one should keep a close eye on 18,200 levels. If by chance we crack 18,200 levels, then we might see some big downside. And this downside, I'm talking about if 18,200 on the downside is cracked, then we might see Nifty Bank slipping to 17,600, 17,700 levels. And as of now, if you see, we have seen today also, in today's session also, some PSU banks like Andhra Bank, we have witnessed a negative crossover on the momentum indicators as well as a technical breakdown also. So as of now, I don't have any comfort in buying any bank counters, but by chance, if Nifty Bank cracks 18,200 levels on the downside, it cracks decisively, then I'll surely recommend a sell on Nifty Bank.
Okay, that's the view coming in on some individual stocks within the banking space. Ashish, let's take it over to you then. What exactly is it that you're picking out for the long-term view for our viewers?
Yeah, a couple of mid-cap ideas which I've identified which can give very good returns in 1 year. My first pick is Future Market Networks Limited. This is a stock which is available at 40 rupees and a market cap of just 225 crores. Again, the promoter holding is as high as 73%, and it comes from Future Group stable. If we see their business model, they are into three verticals. One is retail, another is wholesale, and third is infra logistics. In retail side, they are already managing 3 malls. One is in Siliguri, Calcutta, and Bangalore, and they are expanding in much more cities. Besides this, in wholesale side, they are expanding their network and trying to build up a wholesale market hub in 8 cities in India. And in infra logistics side, they are setting up 8 infra logistics again park in association with the ILFS services. So this is a company which can get good access to Indian retail wholesale market and entire value chain. And this is the reason I have identified this stock, which offer very good potential in long run. My target for 1 year for this stock is 60 rupees. Another pick is Ujas Energy Network. Ujas Energy, this is a company which has given almost 110% returns in last 3 months. And this is again a company where promoter holding is as high as 70%. Last quarterly numbers were very robust, where their net profit went up to 10 crore from 3 crore to corresponding quarter. And they are again one-stop solar power solution provider for investors. And going forward, I see very good appetite for such investments in Indian side. So that is why I have identified this stock. And for 1 year, my target again in this stock will be 75 to 80 rupees.
Okay, Future Market Network and Ujas Energy are two wealth creation ideas that Ashish has identified. So Rakesh and Ashish, thanks so much then for joining us on the show, and thank you viewers for tuning in. With that, it's a wrap on this edition of the show from Awan and myself. Have a lovely weekend.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.